Hello, and welcome to our webinar, Marketing Live Checks, Improving Net Interest Margin with Qualified Unsecured Borrowers. During our time together, we will be talking about the benefits of live checks with Dawn Graeter of Southern Security Federal Credit Union and our Confluent Strategies team members. We will discuss how Southern Security's philosophy towards consumer lending and their need to grow member wallet share led to an innovative application of a traditional consumer finance marketing tool.
If you're already familiar with the live check product and how our prescreen with Equifax functions, but for those who are not, I want to provide a kind of a very brief primer before we get started today. A live check is a promotional direct mailed letter that contains a real negotiable check that can be cashed at your institution just like your members bring through your branches today. Now, the differences between a promotional live check and the one you in your traditional checkbook is that your members' act of cashing the check binds them to a loan with you and your credit union under the terms of the attached mailing. Now, kind of think of it like this. We all receive from time to time convenience checks in the mail from our credit card company or provider. Live check functions in much the same way. Now, in terms of how the pre-screen marketing campaign is structured, a live check program is fundamentally the same with a few nuances. If you've performed a pre-screen with us in the past, you know that will internally help you determine what your underwriting criteria, build out along with your file attributes with a score cutoff that are desirable to you. Now, you'll initiate the project with your sales executive or our client success team to score your membership portfolio, and this provides kind of an additional roadmap to help you understand what maybe that score cutoff needs to be. And with the end game here, you're going to have a mailing list to utilize. You'll design a mailing creative that will contain required regulatory compliance language, and you'll extend a firm offer of credit to anyone who meets your criteria. The primary difference in our live check campaign involves the regulatory language you include, the format of the mailing in which the print mail house you can deliver the mailed check, and how you will fulfill the loans for the responders. Do keep in mind most mail houses have a preset disclosure with all the regulatory compliance language that you will need. Typically not something you'll have to do internally. Now, to learn more about how this process works in much greater detail, please feel free to schedule a meeting with your sales executive, and we'll be happy to go over the differences in these different programs that are available to you today.
It's my pleasure to introduce today's presenter and our esteemed guest, Dawn Graeter, CEO of Southern Security Credit Union, to you. Dawn has a professional career in financial services spanning over 25 years. She began her career in credit union administration in 2008 as CEO of FAA Credit Union, and prior to her time in the cooperative movement, Dawn spent 15 years with Bank of Bartlett. She's very active in the greater Memphis area community. She served as president of the University of Memphis Alumni Association and as a member of the University of Memphis Women's Leadership Council, as well as president of the Millington Chamber of Commerce. In 2012, Dawn was named as one of the top 25 super women in business by the Memphis Business Journal. She's a graduate of the University of Memphis with a business degree in accounting. She's married and has 4 children. Full disclosure here, she's also the chairperson of our board of directors, and we are very grateful to have her in our leadership. So with that, I want to get our conversation started with Dawn. Dawn, are you on the line with us?
Yes, I'm here. Good morning.
Good morning. So Dawn, before we get started, tell us a little bit about Southern Security.
Southern Security Federal Credit Union is a federally chartered select employee group credit union located and housed mainly in Memphis, Tennessee. We currently have 9 locations, which also span kind of the end of the state of Mississippi. So we've got 3 locations in the Mississippi area, as well as the other locations here in Memphis. Southern Security started over 60 years ago as the Rubber Workers Credit Union here in Memphis. They were associated with Firestone Rubber Workers company here, and it was one of the largest plants and manufacturers of tires back many years ago. In the early 80s, Firestone decided to relocate that plant, close the facility here in Memphis, and that's when Southern Security chose to change its name and began expanding its field of membership to include other companies and organizations.
Good deal. So that gives everybody a pretty good idea of the type of individual that you guys and the type of households that you guys are serving. So beyond that, tell us a little bit about Southern Security's overall philosophy when it comes to consumer lending. One of the things that is pretty it's no secret for those of us here in the Delta region, West Tennessee, really just Tennessee in general, is that there's a lot of bankruptcy filings, a lot of middle to lower tier credit profiles in the market. So how do you balance that? How do you focus on balance growth, the safety, the prudence of the loans that you're making, how you ensure quality margin, or what's the mixture that you guys at Southern Security focus on when you're making consumer loans?
Well, at Southern Security, we have a pretty vast demographic within our organization of our membership. We serve some of the largest companies in this area. They're in our field of membership, and so because of that, we have top tier A credit people as well as all the way to the bottom tier. So our marketing and our loan products really have to focus in every area. So it is pretty broad consumer-based lending. We do every type of consumer loan that you can think of. We do mortgages, home equity loans, auto loans, and other things. But I think the unique thing here is we try to serve our entire membership, which sometimes can be a little difficult, as you alluded to, in this marketplace, because 62% of our membership is in what would qualify as low-income designated areas. So in order to focus and provide products and services to a membership that has those financial challenges, as well as a huge sector of our membership that does not have any financial challenges, we have to be very creative and very diverse in what we offer in our portfolio so that we can meet the needs of all of our members, not just a few.
That makes complete sense. It's a little bit of a shocking number when you think about 62% of your membership falling below that low income threshold. So we think about that population typically being the type of profile that frequents a consumer finance company, like a title loan or payday lender type of organization. So what drove you at Southern Security to consider a live check pre-screen campaign? What was one of the most attractive features of this type of marketing tool?
I think to speak to what you mentioned about the underserved, I think we as credit unions were originally created and charged with financial education for people, helping them understand financial institutions and what we can offer and how we can help them. And I think that is what we are charged to do as credit unions, is to try to help our membership financially educate them and offer them products that are much better, less expensive alternatives to a payday lender. They are exposed to things and feel like, because their credit scores may not be as good as yours or mine, that they are forced to use places like a payday lending organization because they can't get financing anywhere else. And so as a huge part of what Southern Security does is financial education, teaching financial literacy in all of our select employee groups and all of our organizations so that people understand there is an affordable alternative for you to be able to get credit, afford to pay it back, and improve your credit worthiness going forward for the rest of your life. And so we kind of look at our charge is to offer products for people at every level that are affordable and are doing what we can do to help serve the needs of our membership. The live check product was an option, something that had not been offered by a credit union in this area, and was a way to give unsecured debt to offer it to our membership at an affordable rate, small amount for small items and purchases of things that they may need. We targeted at first mainly homeowners, those that had mortgage loans with us, and offered it as a product to do home improvements. A lot of people wanted to do different things around their house, but might not have had an extra $1,000 in cash and could use this live check for 12 months to be able to go ahead and do and purchase whatever it is that they needed for their home at the time and pay that back at a reasonable rate. First pull and first target, we were very, very conservative, as credit unions typically are. The guidelines and the criteria that we put out for the pull to Equifax were very, very, very strict. We had a pretty high credit score. Made sure that there were very few or no delinquencies on their records and different things like that. So we really wanted to just play with it and see. Our first target was really the borrowers who have been faithful long-term members of Southern Security, but did not do small unsecured borrowing with us or had not typically done that in the past. So we tried to target people that we had hoped didn't necessarily want to use a credit card, but that did need a little extra cash to do some things that they might want to do at a reasonable rate. In looking at the way that we pull the criteria and we set the target rate, we tried to make sure that we stayed within reason for a tier one kind of an A credit person and not overprice it for this first pull, just to see what the response would be. We ended up doing the pull and mailing about 2,800 checks the first time, and these were all very good members with fairly high credit worthiness on our books, and we sent those out just to see, will people believe this? Will they think it's okay? Really not knowing what to expect. We immediately, the day that they landed in the mailboxes of that group of members, we immediately had 3 people come in with the check wanting to deposit it, and others that called to make sure that it was real. And so it was a tremendous response, and we were pleasantly surprised, at the need and being able to lend money to a group of people that we not necessarily had lended money to in a long time in the past.
And when I think about your charter, your field of membership, this is such a sort of a custom fit for serving employers here in the Memphis market. I think not only for a single sponsor or multiple common bond credit union, this is an attractive product, but even for those credit unions in the community space, this can be an attractive solution because for so many of our credit union clients, they're operating in a market space where folks, regardless of their income level, of their credit profile, they're looking to your point, for those small dollar loans to sort of slot in whenever they have an out of budget need. To your point, if the car breaks down, if they need a new appliance and it's not necessarily in the household budget, that small dollar loan can be a tremendous benefit. And to your point, pricing it in that A tier range really made that small dollar loan attractive for your market. So another question for you here, and you spoke to this briefly just a moment ago, but what was the working relationship like with us and with Equifax to set up the campaign? Because I know that for a lot of our attendees today, that may be a question: is how much of a lift, how much effort is going to be involved on my part to deliver a marketing campaign like this? Were there any surprises, unforeseen roadblocks? Tell us a little bit about that.
I think the initial meeting, we actually had our salesperson as well as a representative from Equifax here. We met as a group to just talk about how this would work, what it looked like in other areas, who had done this type of thing, and really a lot of questions, hand-holding, because, this was something that was different, something that could be, perceived as a negative if it appears like, you're just trying to do this like a finance company, which we were definitely trying not to do. So we wanted to make sure that the marketing piece was something that we would send out on a regular loan promotion. So the construction and graphics and the wording and all that was on that, we spent a lot of time discussing to make sure that it was presented properly. I think we used, you all's recommendation on the third-party source link to do our actual mailing piece that went out. I think the thing that took the most time for us as an organization was the live check piece, marketing piece that is mailed to your members. It has a full loan disclosure document on the back of it. So the member signs the check, keeps the document, and that is the actual loan disclosure information. Obviously, that had to be drafted. The details of that had to be reviewed by compliance and to make sure that we had that properly laid out on the document before we mailed it out. There's some positioning on the live check as far as, the MICR placement and different things like that, so that when you run the check, it will actually read when it goes through the system if someone were to deposit it someplace other than our organization. We chose to set this up as a separate independent loan product so that we could monitor the results and keep statistics on any delinquencies, charge-offs, anything that we're going to have going forward. So we actually set up in our general ledger a loan classification for live checks. And so obviously we had to do some work on that as well, set up new account numbers and things like that, so that we would have the tracking mechanism to follow what our results were on this product. So there's a little back office work. Once that's done initially, however, when you do the next campaign, those things are all in place. You can adjust, obviously, the amount of the check and the rate that you offer it for when you do the second campaign. But your disclosure information, very little change to that. And also the live check piece, just the marketing graphics have to be adjusted. But those are all things that we worked on. Our sales representative with Confluent, as well as with Equifax, were fabulous. We had phone calls, follow-up after that. We played with the criteria that we had picked because we were very, very, as I said, conservative. So we weren't sure when they did the poll that we were even going to get anybody. So So we played with that some, looked at areas where, if we didn't get enough, that we could loosen up, and really discussed and talked about things like that. So the relationship, the partnership with Confluent and with Equifax were excellent, because I think with any new product, there's going to need to be some hand-holding, and everybody there was very willing to do that with us until we got through the process.
We really appreciate that feedback on the campaign process. It's good feedback for us and for the folks that are on the line here. And I continue to be impressed by the knowledge of our folks on the call today. You guys are batting 1,000 so far, and that's fantastic. So, Dawn, as far as the campaign's performance is concerned, we've spoken briefly to it, but the counts that you got back and the cost associated with pulling the records, scoring the records from Equifax, and then mailing the campaign through our partner that you mentioned, did it meet your expectations? Would be the biggest question that we would ask. We have campaigns that perform at just about every point on the spectrum in terms of success, but our obvious objective is that our clients' expectations are met and exceeded. So what's your feedback on how the initial campaign performed?
My answer to that would be it performed honestly better than we had expected. We were very pleasantly surprised. We didn't make as much money on that as we probably could have. Some of that was of our own choosing. It was the way that we priced the product, as well as, the criteria for the pull. So it was not very broad, and we did that on purpose. Just to kind of test the water and see if this is something that would be received by our membership at all. First campaign, we made a little bit, response was good. Now, we've done a follow-up campaign in June. Our first campaign was in March of 17, and we did another one in June of this year, and we changed the criteria on that. We loosened the credit score requirements. We changed the rate. Obviously, rates have moved since March of 17 anyway, so the rate increased on that one, and we sent out a few more mailings than we had done before from the pull from Equifax. And so on our second campaign, our profitability increased significantly. So I think if it's something new for any organization, I think you've got to be realistic in the beginning as to your expectation. Are you doing this? You're going to go out there and really put it out there and focus on making money and offering it to a large number of people? Do you want to play with it like we did and do a smaller pull with tighter criteria to see how well received it is by your membership? I think all of those are questions that you need to ask, your organization needs to ask. And what is your target? What is your goal? What are you trying to do? We were trying to see if this was a viable product that we could offer in our consumer loan portfolio that would give us a little more unsecured debt to a sector of our membership that typically did not borrow unsecured from our organization. We change and will begin to change. We will probably do these quarterly going forward, change the focus of the marketing piece where you target certain things at certain times. The last one that we did was more focused towards vacations, back to school, different things that people also need small amounts of cash for. We increased the amount of the check to $1,200. We had done $750 and $1,000 before, so we increased the amount of check to $1,200, and that was huge. It helped people with some short-term expenses. Continue to monitor the rate and make sure that it's a rate that stays below a credit card rate for most people, and is still, affordable and competitive in the unsecured arena. We were very, very, very successful with this second campaign, and I would say it really went to a completely demographic than the first one. And we will continue to look at ways to target specific markets with this product. And I think that's the beauty of it. As an organization, you can decide who you really want to target to receive this live check. You don't just have to send it out to your entire membership. And so if you want to target a certain, select employee group to give them some kind of a, short-term advantage or benefit that they don't currently have, it may be something that's attractive to that organization because of the way they are structured. If you want to target, back to school, vacations, Christmas, different things that people have short-term borrowing needs for, and smaller amounts. Those are all ways that you could do as many as 4 or 5 different campaigns during a year, changing the marketing focus and also the way that you pull the information through Equifax according to your membership.
So, you mentioned a little bit about your second wave, and, honestly, at first blush, whenever I was looking at the response, it was sort of remarkable to me that you would go up 3 percentage points on the rate, like you mentioned, to adjust for what's happened in the economy, and increase the principal balance of the offer by $200. And your response, from what I can tell, increased as a result. So you've really got a perfect scenario there. You broaden the audience, so you reduced your production costs slightly. You increased your margin and your principal balance, and you increased your ROI to close to a 200% ROI on your campaign cost, which to me is an outstanding demonstration of what we're really trying to drive here, which is that our clients, financial institutions, are in the risk business, as you mentioned. You're not trying to avoid risk entirely. What you're effectively doing is you're assessing the risk of the market in front of you. You're scoring it and determining what your comfort level is with going to the market with this loan offer, and then you're measuring. And I think that's a really important thing to draw out here, is that you guys applied attributes to your loan products that you're booking, so that you can do a post-mortem after the loan is performed for a few months to be able to evaluate what that potential risk is of loss. And as of our conversation previously, my understanding is that you guys have had no losses to date, no delinquencies, no charge-offs on this program. Is that still correct?
Yes, that's correct. And we're 5 months in on the first live check promotion that we did, and so far we've got 0 charge-offs and 0 delinquencies.
That's fantastic. So with that, would you say that this project has changed your perspective on credit marketing? Because from having been a credit union marketer for the majority of the past decade, I'll say that I had some preconceived notions about pre-screen campaigns, direct marketing using scored data like this, particularly in an unsecured fashion. And honestly, this has been a case study that has really changed my mind personally on what a direct marketing campaign with pre-screen data from Equifax can do. Did it change your perspective on what's possible with this type of data?
Absolutely. I think it proves that with accurate data and information on your membership, reviewing your lending portfolio as to who your borrowers within your organization are. We've all got lots of members, and some of them never borrow anything from us. I think, you understanding your membership, you understanding your current loan portfolio, understanding where you have opportunity within your membership to lend money to people that you have not lended to in the past, and with the information that you're provided from Equifax on that membership, it is so much easier to target a group of people with this tool to get them to be borrowers of your organization, and they probably typically would not have been in the past and may not ever be if you had not offered them this. I think the beauty of it is it also makes them think of you. If they have not been huge borrowers of yours in the past, they also think of you when something else comes up in their life or within their family. Then they have a child or someone that needs a car or is buying their first home, and then you've got their attention by doing this, and so you open up some opportunity for them to think of you again when there's borrowing needs from others themselves or in their family.
It's that ideal marketing outcome, that ideal brand outcome, which is top of mind awareness, and I think that's fantastic. Dawn, I want to thank you personally for taking time with us today, and if you don't mind staying on the line, I think we'll open up the floor now for some questions from our attendees.
The first question for Dawn. On your first mail out, approximately how many of the 2,800 cashed the checks?
We had a little over 100 that cashed on the very first mailing. It was about 105.
Okay, the second question we have, what amount and rate was offered on the first pull?
The first pull, we did a two-tiered rate. The first pull, we had checks in the amount of $750. We also had checks in the amount of $1,000. Who those went to was dictated through the criteria of the pull. Rates on those were 6.99 and 8.99.
Okay, thank you. Another question is about our ROIs. How was the ROI calculated? Interest on 101K for 12 months at 7.99% is about $4,400. With campaign costs of $4,600, is there some additional income being used?
No, the first campaign, we obviously we had some expense as far as the printing of the checks and things like that. So we spent about $750, $800 more by the time we paid for all of that than what we actually made in interest income on the first campaign.
All right. We have another question here. Did you offer a larger check amount for a homeowner?
Yes, we did. The $1,000 checks went to those that had mortgage loans with us.
Thanks again for joining us. If you have questions or would like more information, reach out to your Confluent Strategies representative to put this innovative solution to work for you and your members.